everybody. I'm John Ciampaglia. I'm the CEO of Sprott Asset Management, and I'm pleased to talk to you about a very interesting investment idea that we've been talking to investors right around the globe with for the last 3.5 years, which has been very timely, and that's the topic of nuclear energy and uranium. It's proven to be a very interesting investment over the last few years, and I'm going to talk about why the world is interested in this technology and how that fits into the investment thesis around uranium. So let me just share my screen with you. All right, so let's talk a little bit about uranium and the reinvigoration of nuclear power. For those of you that live in Ontario, Canada, about 60% of our electricity actually comes from nuclear energy. So I think it's fair to say that we've been very progressive in terms of supporting this technology when a lot of countries around the world ignored it for the last 30 years. But that is changing very dramatically around the globe, and I'll get into the reasons why that's happening in a moment. Okay, so let's talk about nuclear energy. Why is this becoming topical again? Well, it's for a few reasons. One, it is one of the most energy dense fuels in the world. And because of that, it provides incredible amounts of baseload power because it has the highest capacity factor, which means basically when you start the chain reaction in a reactor, it can run continuously for 18 to 24 months before refueling. It is a very, very effective technology to provide baseload power to a grid. It also has no greenhouse gas emissions, which is very important as countries around the world are pursuing net zero targets. It's also the perfect complement to more intermittent forms of energy like solar and wind, which historically run between 25 and 35% of the time. The last reason why this is becoming very popular is about energy security. And we probably haven't really thought about that term for a number of decades, but if you go back to the early 1970s, the world got an energy shock from OPEC that really opened its eyes to the challenges of having secure energy supplies. And in response to that shock, governments in the West essentially built many of the nuclear power stations that are operating today in the 1970s and 80s. We think that for a number of countries that experienced a similar shock in 2022, when the price of natural gas went up 8 times in places like Europe and Asia, price of coal, electricity went up exponentially. Governments are realizing the importance of this technology. So not going to go through this, obviously, but for your reference, it just kind of highlights how important this energy shift has been in many Western countries. The big driver of growth for nuclear energy worldwide is China. China is building over 100 new reactors, and by the year 2030, we'll have the most reactors in the world, taking a leadership position away from the United States. China is building between 4 and 6 new reactors every year as it's adding more electricity to the grid and trying to transition away from coal power stations, which obviously create a lot of pollution. From an investor sentiment perspective, I think it's fair to say that it's really improved dramatically over the last few years. When we would speak to institutional investors 3 years ago, we would be asked very simple questions about, is nuclear energy safe? What about the spent fuel? Now, those questions are gone. It's really investors realizing the importance of this technology in the overall fuel mix. This is important because there was not a lot of capital coming into the sector for 10 years, and now you're starting to see money return. Last year at COP28, we saw 20 countries pledge to triple nuclear energy capacity by 2050. This is a very bold, ambitious plan, and it's still to be determined whether it gets done. But I think the fact that 2 years prior at COP26, the nuclear energy sector was barely even permitted to attend, the fact that 2 years later, you're seeing governments like the US make these very bold pledges. We think this is very bullish, a very bullish long-term demand signal. So why are people so focused on nuclear? Well, it provides, as I mentioned, a lot of benefits. It provides clean, firm energy, which means it runs all the time. It has a very low land use, which is a challenge in some areas. It has very low transmission build out because the amount of energy that you can produce from just one reactor is enormous relative to other technology. So governments are reshifting their interest back to this technology. The other more interesting thing that's happened and getting a lot of investor interest is why big technology companies like Amazon, Google, Microsoft, Oracle, Apple, Meta are all in this race right now to build out AI, and AI data centers are very energy intensive. A number of companies have signed deals to buy power from companies like Brookfield Renewables or Constellation Energy to basically build new capacity or even restart nuclear power stations that have not operated for 5 years. This is very exciting because it shows you that deep-pocketed technology companies are very focused on ensuring they've got clean, firm energy for this AI race that's going on around the world. And the other part of the capital puzzle that's come together is just a few weeks ago, 14 very large financial institutions around the globe announced that they will be supporting financially this expansion of nuclear power globally. This is very important because just a few years ago, banks were not interested in loaning money to the sector, as many governments were not supporting the sector. So this is another key, I think, shift in psychology and obviously a key part of the capital puzzle that's come together. So let's talk a little bit about uranium. So with this backdrop of renewed interest in nuclear power around the globe, let's talk about the critical fuel, which is uranium, that powers all of these power stations. And what you'll quickly see here is that it is highly concentrated in a small number of countries, with Kazakhstan representing almost 40% of global production. That's the equivalent of OPEC in the oil market. So Kazakhstan has tremendous influence in terms of the amount of production coming from its mines. As well, Canada is a key producer, which is very good, and we believe that Canada is going to be a very big winner in this expansion of uranium mining in the years to come. And the reason is simple. Canada has some of the richest deposits of uranium in northern Saskatchewan in an area called the Athabasca Basin. What this also highlights is how many of the deposits and the production are currently coming from countries not in the West. And this is something that, creates additional risks and susceptibilities to disruption in the supply chain. So let's put it all together and share our supply-demand model. This is actually coming from Mike Kozak at Cantor Fitzgerald in Toronto. He's the uranium analyst there. And what he's built here is a model showing the World Nuclear Association's forecast for additional uranium demand based on all the existing power stations, all the power stations that are under construction. There's about 60 of them. And then there's over 100 at various stages of planning. And you can see here that annual uranium demand will go from about 180 million pounds today up to 300 million pounds in the year 2040. Those bars are representing new mine supply and existing mine supply and restarts of existing mines. And you can see that at no point between now and 2040 does the market get into balance, which means we have a structural supply deficit. And this is a big challenge, but it's also a huge investment opportunity because the demand signals are there, the price signals are there, and many of these mining companies are scrambling to restart old operations or to finally move some new mines into production after being stuck in the ground for the last 10 or 15 years. So this is very positive in terms of underlying fundamentals. And as I mentioned, there are a number of mines. Some of these are in Canada, the US, Australia, Africa, that are slowly coming back onto production, which are very, very beneficial to these companies that essentially had no revenue for many years. Now they're starting to restart these mines and getting back to revenue generation. So very positive. So let's just talk a little bit about the historical bull and bear markets in uranium, just to give you some historical perspective. So we do believe we're in the third bull market that has occurred since the early 1970s. And I'll just talk a little bit about the last two bull markets. Uranium bull markets tend to have very long durations, longer than typical business cycles. And if you go back to the first bull market in the 1970s, it was really about the world moving to nuclear energy for the first time. It created a bull market that lasted a number of years, and the price of uranium went up substantially. And it was really needed to incentivize production of uranium to match all of the aggressive building of new nuclear power stations around the world. We think this bull market will look more like that bull market where the uranium prices rose dramatically and stayed at elevated prices for a very long time. The second bull market was really part of a commodity super cycle that China was fueling. It lasted a long time as well. The gains were much more explosive, and it eventually came to a head when the global financial crisis really reduced demand for a lot of commodities. But it's interesting to note that the price peaked at $135 in 2007. But what's interesting to us is that if you think about that price in 2007 in inflation adjusted terms, that was obviously much more substantial than the current pricing environment. After the financial crisis in 08, 09, we had somewhat of a recovery in the prices of uranium until 2011. That's when we had the earthquake and tsunami in Japan, which then led to a move away from nuclear power, and the price of uranium went from about $70 a pound all the way down to $18 a pound, and the industry basically went into a state of care and maintenance. As you can see from the chart, we basically zigzagged for a few years, and in the last 3 years, we've broken out as all of these positive fundamental changes are occurring. The price of uranium has gone from approximately $30 a pound to currently we're at $83 in the spot market. Even though the price has gone up materially in the last 3 years, we do think there is more upside potential because we need to incentivize significant amounts of new production. And if you go back to that supply-demand model I shared with you a few minutes ago, what that indicates is that we've got a 1.3 billion pound shortfall of uranium between now and the year 2040 based on the WNA model. So it's a significant amount of production that has to occur. The only way to increase production of any commodity is through higher prices and demand. So utilities, who obviously are buying most of this uranium, need to pay up, and they need to buy uranium over long-term cycles, contract cycles. And that's just starting to take off now. What we did here is take that price of uranium in nominal terms, and we basically adjusted it using a very simple measure, which is US CPI. And you can see in the last two cycles, the uranium price in today's dollar terms exceeded over $200 per pound. And as I just mentioned, we're at right now $83. So that's why we remain quite bullish on the price. The uranium equities have also been very strong performers over the last 3 years, and they've been amongst the best performers across many industry groups. They are more volatile. They tend to be smaller cap stocks, but their returns can be very strong when the commodity price has moved higher, and you can see that relationship historically over time. Sprott offers 3 different uranium-related vehicles. The Sprott Physical Uranium Trust, which trades on the Toronto Stock Exchange, that provides you exposure to the spot uranium price. The vehicle owns 65.8 million pounds of uranium, and the value of that uranium right now is $5.5 billion US. Sprott also offers 2 US-listed uranium mining ETFs, ticker symbol URNM, the Sprott Uranium Miners ETF, which gives you a broad cross-section of exposure to the largest uranium producers, the emerging producers, and a number of different development and exploration companies, as well as about a 20% exposure to physical uranium. And then finally, for more aggressively minded investors, we have the Sprott Junior Uranium Miners ETF. The symbol on that is URNJ. It trades on the NASDAQ. And that is basically the small producers and down. It basically does not give you exposure to the 2 largest producers, nor does it give you exposure to any of the physical uranium holding vehicles that we have in URNM. So a number of different ways to get exposure. Generally, what we have found is investors like to take a basket approach, buy a number of companies through an ETF to really diversify any company-specific risk That's been a very popular way for many of our investors to participate in some of these equities. So URNJ, URNM, and U.UN is the ticker for the Uranium Trust. So just to sum up, we think that this bull market is still in the middle innings. There are some very long-term secular drivers supporting nuclear energy, everything from energy transition, energy security, and obviously capacity factors to offset intermittency of renewables. The security of supply risks remain very high across the fuel cycle. Russia is a key player in part of that fuel cycle, and there are lots of sanctions that have been placed against Russia. And as early as September 11th, Putin threatened that he may retaliate by cutting off shipments of enriched uranium to the West. If that were to happen, that would definitely get the uranium price going higher. And as I said, we have a supply gap right now that's estimated to be 1.3 billion pounds to 2040, which we think will be very supportive of current pricing. And then finally, we're seeing a tremendous amount of interest globally amongst every kind of investor group that is doing research in this thematic. And I can tell you 3 years ago, barely anybody cared about this sector. From 2011 to 2020. It was a sector that was really forgotten about. Governments didn't care about it. There was no capital going into it, and clearly investors didn't care. So we've seen enormous interest returning back into the space, and a lot of institutional investors, which I think is really important. And maybe I'll just stop there.